If you've been watching my channel, you know that I recently posted a video about how I lost close to 13K in one of the trade. And that video gets a lot of response and comments, and people were discussing about my trading strategy and, more importantly, how do I manage trade, or what do I do when the index doesn't go my way. I am going to dive more deep into the specific like what happened to that trade. And something I didn't share on that other video is that on that same day, not only I took loss, I actually placed more trades. So later in this video, I am going to share screen and share all the details and what my thought process at that time. Before we dive in, I mentioned this on all my video is that I am not a licensed financial planner or trader or any sorts of thing. So please do view my video mostly for entertaining purpose, and selling option has a lot of risk. You can lose a lot of money. And the other quick thing I wanted to mention is, as an option seller, my key point is really about risk management, because when you write every single contract, you need to know exactly what is your max loss. And if you're not comfortable with your max loss, whatever the number is, whether it's $1,000, $10,000, $50,000, if you're not comfortable losing that money, that means your trading size is probably too big. So I hope you keep that in mind throughout this whole video, because that is also my own trading strategy. I only place trade with the money that I am okay to lose. Let's dive into the numbers, since I think that's what you all are interested in. I am sharing my screen, and this is a portion of my last year October trade. I will start by going through this sheet because I think there are some people also have questions about how to read this sheet. When you look at the top, right, there's a symbol. These are the options that I sell, and I only sell SPX. So you can see there's SPX logo here. That is what I do currently, and that's the only option that I sell. There's a reason for that, and if you're curious, I will link why I only sell SPX video in the description. You can check it out later. And then there's the date acquired and date sold. It can be confusing, but there are two dates. It is because I only sell spread. So, for example, these two, when you look at it, actually you need to look at these four together. When you look at these four, essentially what I did is I sold a credit spread between 67.30 and 67.50. So this is a 20 wide wing spread that is expired in 2025 October 3rd. So this is a past transaction that I made last year. And on the right hand side this sheet, why they are showing short-term gain and long-term gain? This is because of the specific tax treatment for the SPX index. Ultimately, for the SPX index, when you sell options, all the proceeds you get, 60% of that will be treated as long-term capital gain, and 40% is short-term. So this is just what it looks like when I download from my broker, Fidelity, and I didn't change anything. So this is why it looks like, even though like these two on the top two, they are serious, they are just one transaction, but somehow Fidelity break it to two. I think it is for tax reporting purpose. So I understand it can be confusing for people, but anyways, this is what I get when I download the sheet. And you can also see for these transactions, back then, last year, I sold 10. So this is 10 contract on each. And because it's 20 win, 10 contract, my exposure is 20K, meaning I could lose 20K in this one single trade. So fast forward, what happened last year was ultimately I sold this contract on September 30th with the expiration date on October 3rd. So this is very short. This is only 4 days, which is against my trading principles. Again, there are a lot of things that went wrong on these contracts, and also I just started trading, so I don't think I fully understand what I was doing, and that's why I lost money on this trade. I will not dive into what went wrong, because I have a separate video that dive into exactly what went wrong on this specific trade, and feel free to check it out if you're curious. But all right, going back to the sheet. So on October 3rd, which is the expiration date, the stock actually, if you look at the chart on that day, if you look at the SPX October 3rd price, it has a big price range. So when the market started, it actually goes above 67.50, which was my higher side strike price of the contract I sold. And then later on the day, it actually goes back down, and it ended up the day at only 67.15. And so if you go back to the sheet, you will know 67.15, I actually would have been okay. Like, I could have made my premium. I actually didn't even have to lose money. But because of what happened during the day, and when you're an option seller, this absolutely happened. So what happened to me, it's very typical to all the option traders who are doing this, either on their side or as their job, was when the stock actually goes against you. And I'm gonna try to also pull the VIX chart too. When you look at the VIX chart on the October 3rd, VIX also spikes. It's actually a very interesting day, because on October 3rd, when the market first opened, it's pretty rosy. It hit the highest back then at that time, but then I think there's some news, so then later the day it actually drops quite a bit. And then when you look at the VIX, it correlates with the stocks, because the VIX index, it actually spikes right before, kind of right at the point when the stock start to go down. I find that fascinating, because as an option seller, especially when you're selling puts, you do want the VIX to be slightly elevated when you sell puts. So on October 3rd, the VIX actually spikes at around 1 p.m. It was like 17. 17 is not super high, but if you just look at this one single day, it is at the high point. And that was exactly what I did that day too. Now, okay, going back to the sheet. On the top, these are my losing trade, right? So I took about close to 13K loss on October 3rd. But that's not the only thing I did on October 3rd. If you look at what's below here, on October 3rd, yes, I took close to 13K loss, but I didn't stop there. I actually going on to sell more. I going on to sell more because I have a strategy, and I know 13K loss, it's really painful. It is a lot of money, but for me, because that amount was okay for me. Again, this I go back to the risk management and position sizing. It's so important, because the only way for you to be able to stay in the market for the long term is you need to be able to sustain some loss. So for me, back then, yes, I suffered 13K. I was so upset. It was so hard, and especially knowing that I would have been okay if I just did nothing. But anyways, I think that's a tuition all of us will pay at some point as an option seller. But I want to talk more about, it's more about the psychologically as an option seller, when you see, like when you take a loss, how you cannot be too emotional. And that's what I did. Like on that exact same day, yes, I took a big loss, but then I actually go on to sell 2 call spread, which is these. This first one, I sold one for, this is a short expiration date, which I do not recommend now. This is what happened last year, and I don't think, right now, I do not like to sell short expiration day one. These are just about 5 days out. But I sell call spread on that October 3rd. I believe during the morning. I think it's around the same time when I closed my losing trade, because at the midday, that's when the stock really peaked. And when the stock peaked, it's a good time to sell calls because you get more premium, the same delta, it gets you further away from the money. So that's exactly what I did. So I sold a 68.05, 68.25. So this is a 20 spread call. I sold it on the 3rd, right? And it's expired on the 8th. And my exposure is still, again, this is still around 20K because this is the 20 spread. And this one I did end up making money. I did this one because it is a short one, so I closed the trade on the expiration date, and I make about 2,000 back. And not only I sold that, on the same date I go ahead and sell another call, and these 4 I'm grouping them together because this is an iron condor trade. Currently, when I sell iron condor, I usually don't sell call spread and put spread on the same day. Back then, on that specific day, on October 3rd, because the market actually changed in one day. If you look at the graph, right, during the morning, market is rallying, and it hit the high. But then after lunchtime, market dropped dramatically, also coincide with the VIX spikes. So in this kind of day, at that time also, obviously I lose 13K, so I wanted to recoup some premium, which this is a bit of an emotional decision too, and I don't think this is good, but we are all human, so of course we're gonna have emotions when we lose money. Yeah, so then on that same day, and I think for the call side, I'm pretty sure I placed these trade also in the morning too, like right around the time when I close my loss. So I also went ahead, and this one I sold it. So I sold it on the 3rd, right? And then this one is about a month out. I sold a call spread between 7,000 and 7,025. Expiration date is November 4th. So this is about a month out call spread. And in the afternoon, when I noticed SPX started to go down and VIX were spiking, I decided to sell another put spread with the same expiration date, November 4th. And the spread is between 63.75 and 6,400. So this is also about 25 wins. And then fast forward, before the expiration date, these 4, they're all expired on November 4th, but usually I do not hold my contract till expiration. So I buy them back at the end of October. And I ended up, for these part, I make about 4,000 back on October 3rd, just looking at that one single day. Let me try to do the math here. So I am still down about 7,000, but instead of down 13K, I actually was able to react on that exact same day while the VIX was high. I didn't share my October number, but my October number is still positive, even though I have this 13K loss. And really the main reason for that, now that I think back, is because when you sell option, as an option seller, you cannot have a lot of emotion. How to not have a lot of emotion, especially when the market doesn't go your way, is first you need to have a rough strategy about how exactly are you going to trade, and you need to stick to it. And then the second one is position sizing. Again, I cannot emphasize this enough, because imagine let's say if you're selling a naked call and then the exact same thing happen without the other leg to protect you, so you know what is your max loss. If you're selling a naked call and market goes against you, market rally 100 points, if you're trading SPX, you can easily lose 10K or more, depending on how many contracts you're selling. And so for me, I really think selling spread, even though selling spread, it does limit my premium, because I sell one, but then I buy back one that's further away. And so I make less premium. But for me, selling spread and knowing what is my max loss, it's really important for me psychologically, because even though when the stock doesn't go your way, you already knew, like when you place a trade, you know exactly how much you might lose if the trade goes against you. So I cannot emphasize this enough. And I think for a lot of, especially for new option trader, which I notice a lot of people watching this channel, you are new. Again, option trading, it is a lot of risk. You might see me making like 10K or maybe a couple thousand a month. It seems easy. But in reality, I have most of my assets in much safer investments. So option trading, it's something I do on the side. I am using the position that I feel comfortable to lose with. If I lose this money, I know I will still be able to pay my rent with my other portfolio that's already there. So yeah, that is the follow-up story about what happened with my losing trade. And I hope you find this helpful, and hopefully this somehow help you to prevent some of the losses it might happen to you as you continue your option trading journey. If you're curious about what happened with that 13K trade in more detail, click on the video on the screen to learn more. Thank you so much for tuning in. I'll see you on the next one.